Good evening, everyone. We'll start this podcast in another minute. There are more participants joining in. I think we are good to go now. A very good evening, everyone. Welcome to After Hours with William Model India. This is Rajasekhar Kongari, Equity Research Analyst at the firm. Disclaimer for this podcast is that whatever the stocks or sectors we discuss in this podcast are should be taken only for educational purpose and not intended for investment advice. Oh, so let's look into Nifty's today's action, how the market fared. This is a screenshot taken from a major lady broker in India, that is Zerodha. You can see Nifty gapped up today following the strong global cues. US market also closed 1%. Major indices like Dow, Nasdaq, S&P all closed more than 1% higher last night. So Indian market also took strong cues from the global market and Asian markets as well, and it gapped up above 17,000. And following the gap up, you can see for the first half an hour, it was the gap up was sustained, and later there was some selling pressure. This is mostly a profit booking happened by some of the investors who wanted to take book a few profits. However, you can see post that there has been some consolidation with a strong bias towards the positive momentum. During the last half an hour, there was again another set of momentum came into the market, and the market closed near its day's high, that is above 17,150. This is a very good sign for the Indian market. This is today's intraday action. We'll look into Nifty's action for the whole week by looking at the Marketsmith India's daily chart. I can see here this first pink candle is a Monday's session. Nifty closed on the lower side. It closed more than 0.2% lower on volume, higher than the previous session. Hence, we had considered Monday session as a distribution day. So distribution days help us to track the weakness in the market. Last week, we had changed the market status to confirmed uptrend, and we started adding stocks to our model portfolio. So in such a scenario, it is very important to see the weakness in the market and also to book profits in the model portfolio stocks. Tuesday as well, market closed more than 0.2% lower. However, the volume was on the lower side when compared to Monday's session. Hence, we had not considered Tuesday as a distribution day. In the last three sessions, that is Wednesday, Thursday, Friday, you can see all the three sessions, Nifty closed near its day's high, which is a very good sign for the longs. On Wednesday, Nifty reclaimed its 100 DMA, that is the pink line here. 100 DMA is a very crucial level for the Nifty historically, if you look at weekly chart. And Thursday as well, Nifty gapped up, and Thursday's action was also slightly volatile, mostly because of monthly expiry. Today, as mentioned previously as well, gap up was sustained and Nifty closed near its day's high. One more key level it has reclaimed, that is 200 DMA, this black line, which is a very good sign for the index and for the whole overall market as well. As we are in confirmed uptrend, we would want the Nifty. We wanted the Nifty to reclaim its 200 EMA, which happened today. So from Monday, we might see follow-up buying happening in the stocks, and we might see fresh momentum coming into the markets. So please be watchful for the markets, and we will be adding stocks to our model portfolio very aggressively from here, because Nifty has reclaimed its 200 EMA as well. Also on Thursday, we had an additional follow through day because Nifty closed more than 0.5% higher on volume, higher than the previous session. So additional follow through day and Nifty reclaiming its 200 EMA, both combined will give a very good confirmation that rally is about to sustain, and we might see fresh momentum coming into the markets. These are the few signs which are encouraging us to add stocks to our model portfolio. Talking about Nifty's 50 stocks, top gainers are stocks from insurance companies like SBI Life, which has closed 8.6% higher, and HDFC Life also has closed 4.3% higher. Other stocks include metal stocks, that is Tata Steel, Hindalco, which have closed 6 to 7% higher. Sun Pharma, Coal India have also closed strongly, that is 4.5 to 5.5% higher. On the flip side, that is on the losers, we had a very few losers on the Nifty 50 index today. Dr. Reddy's has closed 4% lower. This is mostly because of not so good results the company has posted. Mostly North America and Europe business have had a tepid growth during the quarter. Indian market had a good business. However, the major markets in North America not having a good growth is a major concern for the company. So that is the reason it has closed 4% lower. The stocks have closed very that is less than 1% lower, which is not a considerably selling pressure. Talking about the sectorial view, this is a screenshot taken from NSE website. This is today's action. You can see all the sectors have closed on the higher side, except for PSU banks, which has closed 1% lower. As mentioned previously, metal stocks, Tata Steel, Hindalco have closed were the top gainers on Nifty. So the Nifty metal has closed 3.8% higher. Other indices were Nifty IT and Nifty Auto, which have also closed 1.2 to 1.5% higher. If we look at the weekly trend, that is for the current week, very few sector indices like Auto, which closed 0.7%, PSU Bank 0.1% lower, FMCG less than 0.1% lower. Except all these three indices, all the other sector indices have closed higher for the week. Majorly Nifty metal has closed 7.7% higher, which was followed by Nifty media 5.2% gain for the current week. HDFC, a major housing finance company in India, has reported its quarterly earnings, June quarter earnings during the market hours today. It was a slight miss according to street estimates. However, the stock has reacted positively, and it has closed near its day's high on volume higher than the above average volume. It indicates a strong buying happened in the stock. Some of the key metrics to look into are net interest income has grown 7.7% year-on-year basis to 4,400 crores. Net interest income is the difference between interest the bank has earned from its loans it has given minus the interest it has expended towards the deposits or the bonds. That is the difference is the net interest income. That is a major source of income for the banks and finance companies. Profit after tax has increased 22% on year-on-year basis again to 3,600 crores. Asset quality has improved as Gross NPS have fallen 13 BPS to 1.78%. This is on a quarter-on-quarter basis. Other metrics to look into the stock are the stock has been trading in a consolidation based pattern for the last 4 to 5 months, more than 5 months actually, 6, 7 months. It's a very long base, and also the price action is not so good. You can see on the down days the volume has been on the higher end, which is not a good sign. Currently, the index is reclaiming its key moving averages. Recently, it has reclaimed 50 and 100 DMAs. Currently, it is about to reclaim its 200 DMA, which is another 4 to 5% from the current market price. If that level is reclaimed, we might see fresh buying happening in this particular stock. Because of this, price strength has deteriorated to 47. Technicals have deteriorated because of underperformance in this particular stock. This major candle is on the day when news came out regarding the merger between HDFC Bank and HDFC. However, all the gains were eroded, and the stock was not able to find proper momentum since then. EPS strength is at 85. That indicates it's a strong fundamental character. Being a leader in housing finance company and backup of HDFC Bank, there is no two ways about it regarding the fundamental character of the stock. Only that the technicals have deteriorated because of slight underperformance. A by D rating also has deteriorated to D minus, which is considered poor according to our category. Also, the number of funds have declined sharply in the March quarter. Around 60 to 70 funds have taken out their positions from this particular stock. However, in terms of absolute number, it is one of the leading stock which has highest number of funds invested in the stock. Moving ahead, we have chosen Asahi India Glass as a chart of the day. This has been in our watch list for the last couple of weeks as well. This stock has also came up with numbers today. Even though the numbers on year-on-year basis have fallen both on revenue and profit wise, however, the numbers have been came above estimates. That is the reason the stock has also closed higher, and the volume was also on the higher side. Currently, the stock is in its ideal buy zone of its cup with handle base. Few parameters to look into this stock are what we like about this stock are I can see the RS line has been trending higher, and it has also hit blue dots, which is a good sign of a technical strong performance. RS strength of 82 is also considered good according to our rating mechanism. EPS is at 74, which is also considered good according to our rating mechanism. Another metric to look into this stock is that number of funds have increased significantly from 48. It has almost doubled in less than a year period, which indicates new institutions are taking fresh positions in this particular stock. Also, if you look at EPS and sales growth, the growth rates have been double to triple digits growth, which is what we look for in most of the stocks. As a growth investors, we would like to have a stock reporting EPS and sales growing at double digit, and the numbers should be accelerating when you compare previous quarter numbers. So that is the reason we like this stock, and we have added to our buy watch list as well. So if the action continues, and if the positive momentum continues in this particular stock, we might see adding this stock to our model portfolio. Yeah. Thanks for joining after hours with William Model India. Have a great weekend.